Hello, warriors, traders, investors. We have an excellent guest today. Warren Pies is with us. Am I pronouncing your last name correctly, Warren?
Yes, sir.
All right, so Warren's with us, and Warren was with Ned Davis. He's doing his own thing now. He has 314research.com. He's the founder of that, and also fullcycletrend.com. That's an ETF, Warren?
Yes, sir. Yep. It's an
All
ETF.
right. All right. So you're managing an ETF. And apply your methodologies, obviously, to that ETF. What's the goal of that ETF?
Yeah, the ETF is based off of a model. It's our stock selection model from 314 Research. We've been running it for since 2021. So clients have gotten to see it perform in a variety of market backdrops.
Yeah.
And so it's done very well. And so we had a kind of a grassroots request from clients to turn it into an ETF because we do trade quite a bit in it. We have say we turn that portfolio over almost 4 times a year.
Okay.
Uh, it is it's a monthly rebalance, which is unique for ETF, but I think it's ideal for an ETF because of those factors. So we're harvesting gains and
Yeah.
frequently, and we're able to offset those within the ETF structure, and so it's been really
Okay.
well received by clients.
All right. Before we get to the markets, and there's plenty to talk about, like today's CPI, I'd like to take you back in your time machine, and we know you talk about it. You were with Ned Davis. When was it that you first became attracted to the financial markets, Warren, and knew that this is something you wanted to put your life's energy into?
It's one of those things where I don't talk about my family background that much, but I give a little insight into that. So my nobody in my family went to college or anything like that. I came from um actually kind of a very different or unique kind of background. Is my my father was involved in the fair business. So he would take animals around the country,
Okay.
charge people
Yeah.
with vehicles. So he then he ended up starting his own business and stuff in addition to that. So he's entrepreneurial. But I think he always had this feeling that he wishes he would have had a proper education, let's say. And,
Okay.
and he used to tell me even as like a young adult, teenager, Warren, if you and he would read Barron's and watch CNBC all the time and just try to understand it, but it was from a very uneducated kind of perspective. He'd say, Warren, I think if you could just understand the stock market, there's a lot of money in this. There's a lot of money in this. So he put that, I would say
Oh,
he put it in my head many years ago. And it just so happens, I think that the markets and the economy really were things that they're like puzzles that I could solve, and they
yeah.
really triggered something inside of me. And so I'd say I made a decision. It was really naive. I made a decision in college. I was living with my brother at the time. I said, I think I'm gonna, and my whole background from college was all different too. I said, I think I'm gonna just learn everything I can and just master the stock market. It was just like this naive statement. And so I just went down this rabbit hole of learning everything. And I didn't have a finance background or
Yeah.
business background. I was in law school, and I just kind of went on my own path. I subscribed to like every newsletter I could afford and like would read just books. It's funny when you have a proper background versus a kind of a teaching yourself. Like for instance, all I never went to a class where they talked about Keynesian or John Maynard Keynes. I would read it in a book.
Right.
And so when I started out, I would pronounce it as Keynesian,
Okay.
Keynesian economics. So my point is,
Yeah.
I came out of left field, and it was the family came out of left field, and my interest in this definitely did as well.
Okay. Sometimes our paradigm, I'd say I was raised by a single mother, so money was an issue. And my paradigm in trading that I've had to overcome was being able to risk my profits to let it turn into more. Because when it's there, I don't want to see it disappear. But we all know if you do that, you're not there for the windfalls, right? So I had to overcome scarcity. So we bring our life into this, don't we?
For sure, yeah, and I think that's like It's a good point. It's counterintuitive. I think it hangs a lot of people up. Is why, like, Paul Tudor Jones had it, stapled in the back of his on that video, the trader video. It's like losers average losers, and just like, there's a
Right.
desire to harvest your gains too quickly and let your
Right.
losers. And so you got to reverse all those. There's so many paradigms and so many
Yeah.
intuitions you have to reverse when you start this,
Okay.
which is why we're so data driven, because if the data is going to inform us, not our intuitions.
Okay. So you were out there like you're self-taught, and I learned by going to an exchange floor, which isn't available for people anymore. You get a job as a clerk, and you get to rub elbows with people that are trading every day, talk to them, maybe learn how to chart from them. Who was one of your bigger influences before you started working for Ned Davis, either in a book or maybe a class you took or someone you followed that you still use this stuff today? It's still part of your foundation of what you use today.
Well, I've evolved so much. The what I really it sounds kind of ridiculous maybe, but Grant's Interest Rate Observer was just
Okay.
something to read. It
Yeah.
was something I could afford. It was expensive to me back then because I didn't have any money, but I was stretching by that, and I just was. It felt like when I got my hands on it for the first time when I was like, a college kid, I just felt like I was getting a more sophisticated view of the markets. And, I think it's funny because I've kind of grown up past that over these years,
Yeah.
but I still, I think back to that was a time where I went from kind of just, and I was also, I think, going through the GFC. I came
Yeah.
into as college, I think I was very much a typical libertarian, free market person. And going through the GFC, I realized maybe my mental model, like the Austrian economic mental model, was not appropriate. And so I
Yeah.
kind of had to go with some of those things. And I think Jim Grant was in there, but I always respected that. I taught, I got a kick out of it because years later I would send trade ideas to Charlie, his son, who worked at the Wall Street Journal, and it was just one of those things that was really neat to me to kind of see that come full circle.
He influenced you enough to ever wear a bow tie?
No, I'm kind of the opposite. I'm known for wearing just like
Just
um,
kidding you, bro.
yeah.
Anyway, so, why don't we start with, the big change that we're seeing with administrations and a transition period that we're going through right now? Because, I mean, there's no way you could say it's a status quo. It's the polarity of the status quo. So, after the red wave, did you reassess how you were looking at markets and adopt or get rid of anything that may have worked for many years? Like, passive investing was great for a while. I mean, you could just own the spider and go play golf every day, Warren, for 3 years, and you're okay, you're rich. Do you think the environment has changed, that people are going to have to learn to be more tactical or seek out experts like you? Because right now, everyone's still an expert,
Yeah. I think,
right?
yeah, many things have changed, from I thought that the pandemic in general, if you go back there, was really the demarcation point where we were gonna, beyond just passive equity investing, the 60/40 portfolio itself
Oh,
was
yes.
going to be called into question. We did a lot of work that was kind of the impetus for starting 314, is that we thought the world was changing. We wanted to be out there creating solutions for the new world. And like, one of the things we did is we studied major down days in the S&P 500. And, I really, going from 1998, 2000 period when China came into the World Trade Organization, and we had a whole number of globalization events,
Yeah.
which structurally lowered inflation. If you went from like that period forward, of the 100 worst days in the S&P 500, the bond market was up like 84 of those days. So bonds were an effective hedge to your equity
Right.
portfolio. You go back from 97 into the 50s and 60s, it didn't work like that. When
Right.
stocks and bonds, more common on those down days, were down together. So I think that's more of the paradigm we're in. There are going to be periods where growth is the dominant factor and there is a hedge from bonds to your stock portfolio. But in general, that's changed going way out. Now, when we talk about with Trump coming in, there are going to be, I think that's the more tactical world that we've been in, a different world in general that you have to have that view from 2020 on. But with Trump, there's a few nuanced things so far that I see. Number one, which brings in today's CPI data and things like that, is I think the Fed's so-called reaction function has changed. I think the Fed was, I think the Fed is political, whether people want to admit it or not. And I think the Fed had a strong easing bias last year. And the thing I'm trying to modulate is how that's changed once Trump was elected. And so my view is that their reaction function is in the process of shifting much more hawkishly. And then you go to the tariff question. There is a lot of complacency, in my view, around how the Fed is going to act in the face of these tariff threats. So I think even the threat of tariffs the Fed could use that as an excuse to be tighter. And so
Okay.
these things all kind of have downstream consequences. But yeah, there are a number
Yeah.
of
You
Trump.
you brought him up, so I'm gonna go there right away with tariffs. We had that big reaction on the day that he announced them, and that was, break to buy like everything else has been for many years. This was the tariff day, and we recovered quite well because the market is saying it's just a tactic. Now, do you believe it's a tactic? Because I think the market might be wrong-footed that it's going to be a reality, not just a tactic, probably by the end of the month. Do you think? Because I'm hearing things like tariffs are all bark and no bite. I'm hearing people discount tariffs right now. Are you discounting them if they go into effect?
No, when we opened up that day and the market rallied on the meeting with Scheinbaum and there were a number of,
Yeah,
Kevin came out and said this is a drug war, not a trade war. And
yeah.
so there were tons of pieces of information that came out that day that the market rallied on. And we've been running an overweight equity position for quite a while. We took equities down to benchmark weight that later that day.
Okay.
And so, no, I'm not. I think this is a time to start. I don't want to say we're both bearish because we're just benchmark weight at the moment. But when we look out into April to May time periods through there, I think it's a time to be more defensive than offensive. And I'd say we're
Okay.
generally bullish this year, but that's over the next 3 to 4 months. That's the stance we're taking. And it's a little early to get straight up bearish in my view, but that's the posture. And I
Well, are they going to ring a bell?
ring a bell when, at the time.
Yeah, now
Well,
it's time
Trump
to be
rang the
very,
bell. Maybe Trump rang the bell at the top when he was at the
yeah,
NYSE.
yeah. Um, so, you talk about this potential growth scare in the spring. And actually, I have some cycle lows due in March for for the bonds. But I think we're going to make new lows. And you know how sometimes Uh, presidents come in, like Obama came into the GFC and Bush came into the dot-com bubble. And this candle here on the bonds, and longer term, if we take out 85, could we be on the verge of what happened in the UK where the gilts had, you know, a real bad day, kind of a sovereign bond type of crisis. Is that what Trump's going to be dealing with? And, he came out and said the Fed should lower rates. And after a number like this, I could see things becoming more and more bellicose as time goes on, especially if he's successful in bringing oil down to 62 or in the 60s, which I think is possible. He'll be screaming to lower rates if crude breaks into the low 60s. Do you think we have a battle as far as the existence of the Fed? with this president?
Well, I think there's a tension, but as far as like, will we have a kind of Liz Truss moment here? No, I don't think so. I think if we got to the 10-year back to 5%, you want to buy that hand over fist, in my opinion. That would be a move I would be buying, especially if it was in the near term here. And so um that's so I think that there's if you look out the
It's going, you're going to have your chance.
well, if we do, I think that's where you want to be ready what you're going to hear when we get to 5% is a lot of calls for 6%. And
Right.
in our analysis, we just don't see a path to getting this anywhere close to 6% on the
Five and a half.
no, not really. I think the
Okay.
top
Five.
you would be 5.25. That's the highest we'd be. I think to get to 5.5, 6%, you need to have the market decide the Fed's next move is going to be a hike. So we've done a bunch of analysis on, where should the 10-year trade in relation to the Fed funds rate. And right now at the moment, what we're at 4.5 on the Fed funds rate and
Yeah.
4.65, so 15 basis point. That's what you would expect to see in a market that expects the next two moves for the Fed to be cuts. That's what your historics. You're right around where you should be. Maybe a little overvalued on the 10-year at the moment. So what
Okay.
needs to happen is those cuts need to get priced out, and then hikes need to get priced in, and that could take you to 5, 6%. But I don't see
Okay.
that. I don't see that happening. I don't think that's on the table.
Okay. Does the dollar ever come into your focus, Warren? Now, I think it's kind of the fulcrum of the wheel that everything spins around FX. It's the deepest market, and FX moves can at times affect everything like earnings and imports and exports. Do you have a view on the dollar? Will Trump be able to get his way? He wants a lower dollar to be able to export more and make us more competitive. The race to debase, he thinks the dollar should be in the lead here. What do you
Yeah,
think?
it comes into our view. I see it right now as all one big trade, and
Yeah,
locked in with the Fed.
yeah, it's been all one market for a long time now, Warren, hasn't it? I mean, everything pretty much goes up together and comes down together, different magnitudes, but it's almost like it's all one market.
Yeah, and I do
You
think,
feel?
yeah, 100%. And I believe that it really we have to ask ourselves like what's driving it, and it's really meat and potatoes growth and inflation in the United States, and then mixing in what the Fed's going to do. To me, those are the drivers. And so, we just talked about like where should the 10-year be? Well, where bonds are going to go ultimately is going to just be dictated by the data, like we saw today with the CPI data. So you need to be able to, I think, have a view. I know you're looking more technically.
Yeah.
And so I think the dollar is going to be strong until the next round of cuts from the Fed come into view, which I
Okay.
do happen. But
Okay. So you think that this is not a top, we're just consolidating before new highs. You see like a subpar euro, that's kind of a benchmark for people. We've had a nice little trying to carve out a bottom here. I'm actually bullish. But you think the dollar's going to rally here?
I don't think well, let's just say I don't expect it to weaken dramatically. Like I think we
Okay.
stay up in this range. I do think there's this kind of there's this automatic stabilizing effect from all these markets. So the dollar strengthens too much is going to be a negative feedback loop into the
Right.
economy, to the
Yeah.
data. I don't see
Yeah.
it. I mean, I really don't think in the near term there's going to be significant upside or downside to the dollar. I think we're in this holding pattern really for yields, for the dollar, for everything that's in this big trade. And you're seeing it in stocks too. We highlighted this in our last report, is the stock market is in it's in
Huge
a
range.
range, and so everything's in this holding pattern. And I think what's going to break it is the data, and the data is going to be going from into, I think April, May is when we're really going to get the next big cards flipped on the data
of
side.
of economic weakness. So, a lot of people would look at this chart in the S&Ps, and you have to have recency bias. So every dip and every sideways action is always resolved to the upside. But couldn't this also be 2, 3 months of distribution with the leaders breaking down? I mean, the Mag 7 has been under huge pressure. I don't buy the argument that there's enough rotation in the universe to hold up the market if the leaders that got us there are in trouble.
I
How
agree with
about
that.
you?
Well, I agree with that part. The Mag 7 is just too big of a component, and then you start working through everything else that's tied to it. And like I've said the same thing about semis. A lot of people were saying,
They
semis have
they were going to double.
yeah, or semis were gonna have a down year, and software was going to take the baton this year. And I don't know. You look at like the bulk of earnings, semis are like the largest driver. Nvidia's in there as well
Yeah.
of earnings this year. So I just have a hard time envisioning a market where Mag 7 and semis, just fall apart and the rest of the market takes the baton and really drives it higher. So yeah, I'm with you
Okay.
on that. The
Okay.
analysis, which I could pull up on our chart if I don't know if it'll work or not, but I can pull up on our site is
Go
we look
ahead.
at these these tight ranges out of the S&P 500, and it's not something that'll surprise you. I'm gonna just share my screen if that's okay.
Yeah. Go ahead.
Uh,
Great interview, by the way.
well, thanks. Let's see if I can. Let's see if.
It's that little green. If you scroll your mouse on the bottom of
All
this,
right.
there you go. You got it.
You see it?
It's coming up.
Good. All right. So this is our
There.
site.
Okay. Got it.
Like, let's see. This is our most recent report, and we had a study in here, which I think is instructive to the chart that you're showing of the S&P 500. And so let's see if we can get this to not glitch. Yeah. Um, so we looked at
There.
these tight ranges that the S&P
Yeah.
trade. So we defined it in a number of ways, but the bottom line is this kind of 7% total range with some like volatility constraints. And we highlighted it's about this type of a range occurs about 13% of the time historically in the S&P 500 going back to 1950. And we've shaded all those periods here. And so it's a relatively rare, and what's really interesting to me is you can see there's some really nasty cases where
Yeah.
we these and it's right at the top in the
That
GFC.
was COVID. Oh, that was, yeah.
That's
Okay. Right.
GFC. But we do have one in 2022 that came after the 2021
Right.
market. So there are some nasty cases. You go back and see some other topping type of cases in the 70s and things like that. So definitely are some nasty cases. There's some continuations though too, as you grind higher in the 90s, for instance. And so we wanted to have an idea of what's the where are we going to break? And so this is our we took all those cases and we said, okay, let's break them into where the next move out of that range is a definitive break higher, which we just defined as a close 3% above the top end of the range, or a close 3% below the top end of the range. And it's not surprising the direction of the break is really important for where stocks are going. That's what we're looking at here. The purple line is those cases where you break to the downside of that range, and the blue line is those cases where you break to the upside of
Okay.
those. So not rocket science, but
Yeah.
where
How
we're
are
at.
you defining the range now? Is it seven? Is it between 6,100 and 54? 7%? Something.
750. It's a
Okay.
3 month rolling range is what we're looking at. And
Okay.
it's actually tightening up because we had that big post-election move, which is rolling off.
Right. So it's compression's building up.
Exactly. Yeah, exactly.
Okay.
Um,
What what a great interview, Warren.
well,
I want to thank you for granting it because you didn't really know me from Adam. One of my spiritual tweets I saw liked by you, and so I went for it. I said, "Well, he can't turn me down. He's my brother."
that's
So
right.
anyway, I follow some of your other videos. I really encourage people to check you out, and you just did a yearly report that you put out. I saw in your stream that people get prepared. You're very, you know what? You're the way you were brought up and the way you turned out with your demeanor, and you have a pretty calm demeanor. You're suited for this. So isn't that something that your dad planted the seed because he knew the apple didn't fall far from the tree, and he just wanted a better life for you, and his dream for you is coming true. I
Yeah.
think it's a beautiful story, man. Really.
There's so much there too, but yeah,
Yeah,
it's been crazy to live this story, to be honest.
yeah,
So
yeah. So I hope you have a great year, a great
appreciate it.
2025, and it was really a pleasure meeting you.
I appreciate it. Appreciate you reaching out to me.
All right, so Warren Pies, everybody, check his work out at 314research.com. Follow him on X at his name at Warren Pies, and consider his ETF. You know what I tell people? Diversify away from yourself. And that's because I know my life, because we all have drawdown periods, the best, even Tudor Jones. So it's good to diversify your holdings away from your discretionary or systemic, system trading, and give it to other competent people. Delegate like our new president does, right?
Yes,
All
sir.
right. All right. Warren Pies, everyone. Thank you, buddy.
Thanks, Dale.
Oh, one last thing. When you do an interview with me, you're now not just the brother I thought so before, but now you're my trading warrior brother.
Okay, I like
Uh,
it.
you're
Take
in the
all
club. You're in the club, Warren.
I'll take all the support I can get, man.
All right, man. Good hunting.
All right.
Warren Pies, everybody. It will be on video so you can watch it again. And this guy should be part of your intelligence gathering. He's part of mine. So don't just count your pips, count your blessings. Adios, everyone, and see you tomorrow.